Hey everybody, oh look at the crazy head today. Welcome to the Thursday evening financial thing live stream. Coming to you today from a very balmy Orlando, Florida, 32 degrees centigrade. Is that centigrade? I think so. 32 degrees centigrade, 90 something Fahrenheit. It's very hot. Be glad when this hot weather is gone. But anyway, we're going to be talking about peer-to-peer lending tonight with a little bit of stock stuff mixed in at the end. And what are we talking about? We'll be looking at some statistics today. I always like to kind of go into some of these platform statistics and just see where the numbers are at. And sometimes they can be a little bit tricky to find for one reason or another. So I'm going to go through maybe three or four platform statistics, see how the numbers are shaping up for 2022 and maybe for the last 12 months. As the economy continues to run into some troubles, I expect that maybe some of these peer-to-peer lending numbers as far as defaults in the future may start to rise up a little bit more. But we'll take a look at that. And God, the stock market's just been absolutely awful. If you compare from a week ago, the trading 212 portfolio was looking really healthy, and then just in 1 week, everything has taken a turn for the worst. And I tell you, it emotionally gets really heavy when you watch a portfolio just kind of dissipate from where it was. You think you're starting to make progress with trading an account to get it to a higher number, and then boom, a few bad days in these stock markets can definitely take a toll. But have to stay strong, because that's what any good investor does. Realize this is not a short-term situation. Investing is a long-term game. Even our trusty Vanguard index tracker has been stumbling recently. So it's not just oil stocks and commodities. We've seen it happen across the markets. So we'll take a quick look at that. But I hope you are all doing really well. Thank you for tuning in, as we say in the UK. Hit that thumbs up button for me if you can. It helps out a ton. Paul is here in Kenilworth. Paul New, Stockport. What's happening with Bitcoin? Seems to be stuck below 20,000. Yeah, I think Bitcoin is going to have some turbulent times in the next few months, and you may see it kind of dip down into the 17,000 US dollar range. You got some things happening in the just general economy, the financial markets, which is putting a toll on Bitcoin too. Not surprised. I just think it's going to be dormant for a while. We saw this fake breakout where it started to look like it was coming up a little bit to the $23,000 range and then just pulled back. So I wasn't surprised, but I don't think Bitcoin is going to reignite for a while. But I like that because it's a good opportunity to accumulate and buy more. Hi, Dave Dawson. Nice to see you. Good evening from Peter in Leatherhead. The weatherman said it was the start of the meteorological autumn today, and it is feeling it. Certainly not here. Colin Perry is here in the Peak District. Mark Mason, good evening to you. And Paul New says, with energy prices going through the roof, a war in Europe and markets crazy, all seems madness, doesn't it? It's going to be a really interesting winter. See what happens with these oil and energy prices going on, with what's going on with this conflict. And will we see oil go back up again? Because I think the last time I checked, it was in the 90s for Brent and in the $86 range for crude. So we'll see. Evening, Stephen Hell in Nottingham. Mike is here in Southampton. Welcome to you all. Really glad to see you. Let's get right into it. Do a little bit of news here. It's good, healthy news for the peer-to-peer lending world, as peer-to-peer property lending nears 5 billion squid, 5 billion pounds to date. We have some of the bigger property platforms have done some pretty good numbers when it comes to lending. What this means for you is if you are invested in peer-to-peer lending, you're going to continue to see property loans being offered as more lending is done. There are 23 peer-to-peer lending property platforms currently operating in just the UK alone. And we've seen the largest lender at Assets Capital, which has loaned over £1.5 billion to date. And development lender Sancus, which has loaned £1 billion. Assets Capital has returned over £200 million to investors in interest payments alone since 2012. It's really positive news. Then we go to Folk to Folk. Total loan book of just over £500 million, with more than half of this, £275 million, going to fund just UK properties alone. We have 4 platforms that have recently passed the £200 million loan book milestone, which is Crowd Property, Somo, Kuflink, and Capital Rise. I got to be honest, Somo I haven't really paid much attention to at all. It might be something to dig into, but we certainly are familiar with Crowd Property and Kuflink and Capital Rise. By the way, if you are more interested in Capital Rise, you can go back and look on the archives. There is a interview that I did with the head of Capital Rise in London just a couple of years ago, which is on the Financial Thing YouTube channel. These 4 platforms, Crowd Property, Somo, Kuflink, and Capital Rise, are all in scale-up mode at present, according to this article, with Crowd Property recently expanding into the Australian market and Kuflink aiming to double the size of its loan book within 1 year. Another 3 platforms are hot on their heels. Invest and Fund has lent out £196 million to date, while Downing Crowd has arranged £182 million of debt facilities. Crowd Property, which is the 4th largest property lender with a cumulative loan book of £241.7 million, has estimated that its loans have helped fund £557 million worth of properties and created more than 2,500 homes. These calculations suggest the peer-to-peer lending property market has contributed far in excess of £5 billion. You know what I always find very interesting? When I Google these companies, for instance, Crowd Property, I always like to see what the reviews are like. See if we can zoom in a little bit here. 4.3 out of 5 stars. Let's see what people say about Crowd Property. Very poor communication, takes days to get an answer back. We purchased a property at auction. They were aware that speed was critical. Speak to friends in the know. Wish I spoke to them beforehand. Gone somewhere else. Blah, blah, blah. Don't know why that is. Kay Wood says, this is a top tier peer-to-peer investment opportunity. Crowd Property are an excellent platform. Generally positive reviews. 3 stars. If you try and invest on a platform that opens at 10 a.m., by 10:01 a.m. it's fully funded. It's a club for the boys. 6 times in the last week I tried to invest. So yeah, that's kind of a common thing with Crowd Properties. There's just not enough availability out there and too much money going in. This person says they're surprised how good the withdrawals are. So generally good feedback. I mean, when you've only got 9 reviews, you get one star. It brings down your averages quite a lot. So not sure what that one's all about, but generally pretty positive. And then if we take a look at our friends over at Kuflink, they have generally really good feedback online. 4.6 out of 5 stars, 41 reviews. Look at this. This is a development from a borrower. Kuflink were the lenders in our last development project. They were great to work with from start to finish. It's nice to see actual borrowers posting reviews like that, because we don't rarely ever get to hear from the borrower side. Taylor Reeves said, this is a fantastic company to get involved with, especially as a keen long-term passive investor. Haney, I've invested in Kuflink, 5 stars. So generally just really good feedback from people on Google. See what we got in the newest. Callum Scott, yeah. Looks pretty good. So generally the companies that we talk about on the stream seem to be just still continuing in the right direction. Let's continue on. Rebuilding Society reached 13.82% in July. That's their cumulative annualized return. The peer-to-peer lending platform received £120,853 in capital payments and £37,416 in interest payments on public loans last month. £1,482 was recovered from default. This led to a net profit of £23,635 for lenders, which is 13.82% per year. We also track, it says on this article, this is I think from the CEO, we also track the net return for the lifetime of the company. This figure remains at around 6.16% net return per year. This is, Rebuilding Society, I kind of have a love-hate relationship with. This is one of the early companies I invested in. I kind of had some bad experiences with one or two of the loans that I invested in. And the CEO has always kind of wanted me to put a more of a positive light on the company, but all I can do is really write about my experiences. That was what Financial Thing was started for, and my experiences were not the best, but they seem to be doing okay. One thing that I do find a little high is down here. You can say the total capital still out on all loans is £2 million, and out of this 15.22% is in default. So what are we talking about? £360,000 in default. I think that was always my big concern about lending private companies, small and SMEs. If you're not experienced, they can be extremely troublesome. But having said that, Rebuilding Society does have a lot of fans out there, and they are continuing to deliver some really high returns, at least for the last few months. Assets Capital, they are raising money again on Cedars. Cedars is a funny thing. It seems like Asset goes on Cedars a lot to get money, extra money, and people seem to love buying the shares. They have raised, let's see here. Here is it looks a little funky on the screen. Maybe we should zoom in. They have raised £297,766 from 250 investors. They still have a while to go left on this. If you want to get involved in this, buying equity shares, you can get it for a share price of £3.15. And I think they've done this several times in the past. The lender's last Cedars funding round was oversubscribed with 1.5 million, ultimately raised against a target of £500,000. I'd be interested to see how these share prices have changed over these offers. I've never really been a fan of buying these private equity shares. It's not my preferred method of investing, but Assets Capital continues to raise money on Cedars. Also, other assets news, they have hired a new managing director named Andrew Charnley, and I kind of always like to just see who these guys are that these companies are hiring. It's got a pretty good resume. I went on LinkedIn, took a look at this guy's background. He just started the managing director position. It says June 2022, so a while ago. But he was a director of credit and portfolio at Together Loans, Mortgage and Finance for about 3 years and 8 months. He also worked at Lloyds Bank for 3 years. He was the head of sales for Invoice Finance. Worked in trade and working capital. And he worked at Barclays for 8 years and 10 months through a couple of different positions: business banking, account products, and trade product management. So definitely has a long history of a lot of experience in the finance world. So, Assets continues to add very well qualified people to their team. Why do you care about that? Because I've always said the people that are behind these companies are very, very important as far as their long-term survival. So good for Assets Capital. Article here: half of Brits have stopped saving as crisis hits. This was a research from NerdWallet, they found that 63% of those who had either reduced or stopped saving said they plan to resume contributions within 6 months. A further 14% said they hope to do this within 9 to 12 months' time. So almost half, 46% of Brits have stopped paying into their pensions, investments, and savings in order to cope with the ongoing cost of living crisis. Now, one thing I wanted to say about that is I think sometimes people pull the plug on things that are really important without looking at other places in their life where they probably spend money where they don't need to. One of my friends who I'm helping with his finances right now said that he just did a very simple budget and realized he was spending a ton of money on coffee, and signed up for a £25 a month unlimited coffee program, and he figured he was saving himself at least £70 to £100 a month because he was buying so much coffee. And I just think that sometimes people are not necessarily prepared to cut out the things that they need to in order to invest their money, which I think is far more important than a cup of coffee. Another problem too is if you stop paying into your investments, it becomes kind of habitual. When you stop it, it doesn't become a priority to restart it again. I think once you get into the habit of just investing every month, automatically it becomes a good priority in your life. And it's really sad to see that many people, 46%, stop paying into pensions and investing. And then another thing too, when the markets are not doing well, people tend to stop investing, which is completely the opposite of what you should be doing. If markets are going down, it's a great time to buy because you can buy stuff cheaper than you could when they were high. I mean, everybody was always saying about Bitcoin being too high to buy when it was 60,000 US, 50,000 US, and now you can buy it at 20. People don't want to buy it because they've got their mentality flipped upside down. So hopefully this will change. We won't see other articles like this because I know things are tough out there. I mean, we see these inflation numbers. There was this article in The Guardian that said energy prices could push UK inflation to 22%, a near post-war record. This is going to put a lot of pressure on people that don't have a lot of disposable income due to things like energy prices, food prices going up a lot. And that would essentially stop them from being able to invest if they are not careful with where they're actually spending money. But that's a crazy article that inflation could reach about 22% next year. We'll see if that happens or not. I have a feeling that that's really reaching. I could certainly see inflation being 13, 14, 15%. 22, I think, is super high. But we are seeing, again, these commodity prices. Look at the major indexes today. Really struggling, 1.1%. We've had a few down days. The S&P 500, the FTSE down here, the UK 100, minus 1.86%. And things just looking struggly, as I like to say, in these markets. If we look at the last 1 month, we were up here at very close to 7,600 in the UK 100. And now we are down to 7,100. So we've lost about, 8%? 8.5% in a month. And it does certainly feel like something is bubbling on the horizon. Same with the S&P 500. Down here, we were close to 4,300, now down to 3,900. And the crazy thing is, if you look at these technical trading kind of gauges right here, they're at strong sell. Not that I always pay too much attention to these, but it is interesting to see strong sell signals both on the FTSE and the S&P 500. So people are kind of getting a little bit nervous about what's going on with the markets. I definitely see the risk going up and up and up. So we're keeping an eye on that. Hopefully that will turn around, but I'm not convinced we're out of the weeds yet. Here we go. Assets Exchange sent out a investor update. They continue to really have positive news. I like the way that they send updates like this, and I think that's a good thing. It says that after July's lull, activity picked up in August with over £1 million both deposited and traded on the exchange. 3 properties launched in the month, leased to 3 different partners, supporting 3 distinct groups of vulnerable people, giving our investors a wide variety of choice. We had one in Immingham, a place that I'm familiar with, up in Lincolnshire. We had a house, two large semi-detached houses in Stockton-on-Tees, and a 4-bedroom in Ramsgate. The property pipeline says, while concentrating our efforts on sourcing for our existing partners, we are pleased to find another suitable property for Nacro in Chatham, Kent. It's going to offer home to 4 people. We've also just had an offer accepted on a block of 4 new build self-contained flats in a very nice area of Macclesfield. And they are appraising a very nice scheme in Tonbridge, Kent, which will provide home to 5 people with learning disabilities. So Assets Exchange continues to do good work in that field. They are also rolling out improvements on their ISA transfers and doing some website improvements, which is nice to see. And then if you're interested, you probably would have gotten this update if you are signed up for Assets Exchange, but they have some updates on existing properties on their platform. So good stuff. Also, Loanpad announcing that they have moved up their interest rate now to 4.3% for the annual yield on their premium account, 3.1%, which is the same on the classic. So this continues to move in the right direction. Not going to beat inflation with 4.3%, but it's good to see it continually heading up north. So 4.3%. I'm just going to log in, see what the loan statistics are on Loanpad. Let's go take a look at the live data field. Come on. Here we go. So we have about 3, I think the last time we looked, this number was 169, so 172, continuing to add more loans to the loan book. I think this number 4209 is exactly the same as the last time we checked. For £142 million total loan value. Loanpad has £70.6 million of loans against £142 million loan value, which is a very low 42%. So continuing again to go in the right direction. Wanted to talk about statistics. So again, I like to try to probably once every month, maybe once every 2 months, just kind of take a look at the statistics on these websites, on these property platforms. Sometimes they can be a little tricky to find, so I thought, let me go through and see where these statistics are. So crowd property, I usually just scroll down to the bottom. I think sometimes that's the easiest place to find statistics. By the way, hit that thumbs up if you haven't already. It helps out a ton. Hope you're enjoying the content. Glad you're here. Let's go all the way to the bottom and try to seek this out. Okay, under the About, if you want to look at the statistics on Crowd Properties platform, under the About section down here, you can go right here, Statistics, and we can see here that they've funded £578 million, just like that article said. You can see some nifty graphs here. What we want to look at is any of the loans in trouble. Year to date, they have originated £103 million of loans, lent $67 million. Average size of the loan, $526,000, which is manageable. They have 129 loans originated in 2022 year to date. So I wonder if they're going to beat this 2021 number of 155. Let's see. 14 months is the average. Loan to current market value 61.4%, so very reasonable. 0% losses. Look at this, all the way across the board. It's a pretty impressive number. Anticipated loss is 1%, and all these zero numbers here for capital losses. So those are really positive numbers. You can see here that borrowers are paying 9.75% year-to-date 2022, which works out to be an actual rate of 9.97%, and investors are getting about 1.5%, 2.5% less than that. So there's the spread. That's what you should be achieving on average. So good statistics there. Let's take a look at Kuflink. Where do we find their statistics? Again, I'm going to just go down to the bottom. This is one thing I do wish that peer-to-peer lending sites would do, is put this, in an easier to find spot, because it's just so hidden sometimes. About us down here. Here we go, statistics. See what our friends at Kuflink are doing. 209 million pounds invested, 122 million repaid. So big amount repaid. Let's see what that track record looks like. 2022. 23 loans. Smaller loan amount here for Kuflink for 2022 versus 2021. 113. 23. So obviously Kuflink is becoming a lot more high standards about who they're lending money to. Total gross loan amount this year, 14 million pounds, so small. Average gross loan to value 61%, average net loan to value 54%. Average loan is about 600,000. The property value average of £1 million per loan. And average monthly interest rate 1.1%, so they're staying competitive. Percent of loans repaid late, so 0%. You can see here, these numbers tend to be high in the bridging and development numbers, but the main thing is you want to see how many are actually in trouble. Doesn't look like these numbers are working. So let's see, any default numbers here. Yeah, I need to refresh this. No, looks like some of this is not working. Oh, here we go. There's the annual investment returns, 2021, 5-year 7%. Select invest. So that's average for people that are picking out their own loans. 2021 was 6.76. And here's the default numbers for graded ABC loans. Actually, really low. I mean, look at 2021. You can see only 3% technically defaulted. And just very low default numbers. 2022, 0%. And estimated for 2023 are going to be low. Oh, sorry. That is the FCA's default definition. Never mind. Let's go to the Kuflink's default definition. So you can see here, the B-rated loans, definitely a higher percentage rate of defaults. A loans, 0.27%. If we look at back in 2020, this was numbers at 17.31%. So it looks like they managed to get that down quite a lot. And then you can see obviously here in the B-rated, which would be considered higher risk, at about 18.8%. So definitely like to see those lower. I think one thing I will say about Kuflink, they really do handle defaulted loans generally well. So even though that is a higher rate, I expect them to continue to handle those defaults appropriately. Blended, they have an 8.79% default rate. It is a riskier nature, obviously development and bridging loans. Let's have a look at assets capital. See if we can find there. statistics. Where are you, statistics? So if you scroll all the way down to the bottom of Assets Capital's website, you are not going to find the statistics link. But I believe under the invest, here we go. If you click on the invest, you go to loan performance. That's how you find Assets Capital. Again, a little bit hidden. I like to see them put that in a bit of an easier place to find. So here we go. Actual default rates. That's the number we want to look at. 2019, 10.5%. 2020, 1.4%. 2021 and 22, 0%. But you can see the expected defaults here. 2022 will be 6.4%. And expected default rate at loan origination, 6.2% for 2021 and 7.5% for 2022. I think you can have very different results when you're an assets capital investor, because certainly a lot of my manual selected loans are actually not performing at the moment. So it really depends on what you invested in. But assets, again, the nature of that type of investment is going to produce probably a higher default rate. But still, according to these numbers, if these numbers are accurate, they are not terrible. Even at 10.5% is actually pretty low, I think, for a type of assets capital product that they are loaning to. Let's go to Unbolted. Let's see if we can find their. This is another one that's not very easy to find. I don't see it down here in the links, so I had to Google it. And if you Google Unbolted statistics, you will stumble upon this page, which is the performance summary as of the 31st of August 2022. 5,685 loans have been repaid or renewed. That's 40.6 million pounds. So quietly, Unbolted are just ticking away, and it's quite a decent sized loan book. Another 503 loans with a cumulative loan value of 1.9 million have defaulted. This equates to a default rate of 7.5% by number and 3.9% by value. Right, but this is the nugget that is the beauty of Unbolted. Down here, of these defaulted loans, recovery has been completed on 449 loans with a recovery rate of approximately 130.8% of net amount due to lenders. So they are recovering on £1 of a defaulted loan, £1 and 30p plus. So I mean that's a really healthy number. It's a really, really healthy number. And I'm surprised these default rates are not higher. Having some experience in the pawnbroking business, I know that default rates, I remember, used to be a lot higher than this. But consumer loans against gold, 6.6% default rate. Consumer loans against non-gold, 8.2%. High net worth and business loans, pretty low default rate of only 3.1%. So it seems that Unbolted is a really good handle on what they're doing, and especially with loan default recovery. The thing about Unbolted is that they can sell their assets very quickly, especially if they're gold assets or jewelry. They can be sent to auction, and it sounds like the way that they're valuing it, they're getting more back than they actually lent if the item does actually go into default. So well done, Unbolted. So good. If you want to look at statistics, I don't know where you find it. If you are, it says here, home, peer-to-peer investors, investment returns. So if I go to investing, oh, here we go. Okay, it's right here, seen loan performance. So if you go to the invest link up here on the right and Unbolted, you can click on here and see loan performance. But if you go down to the bottom, you're not going to see it here in the links. So I definitely urge you, if you're an investor in these companies and you do buy loans through these companies, go and check on these statistics at least once every couple of months and see how things are going. All right, let's look at some pain. Some pain right here in the Trading 212 account. We are down to 18,909 pounds. Obviously, the markets have taken a beating recently, and some of our oil and commodity stocks, look at Arch today, minus 5.24%. This was, I think, last time we looked in the green, 12%. So we've taken a 15% swing from 12% in the green down to -3. And I did actually put some more money into Arch. Of course, bad timing. This goes to show you how difficult it is to time. I bought back in. I'd sold some, I think it was about 160, 159. And then I thought, I watched Arch drop. And I thought, let me buy some more. You can see right here, I bought 13 shares, 1,757 pounds, when Arch was 151 pounds, thinking I was getting a bargain. Again, with Synovus CVE, also bought at $19.10. So you can see here, this is a missed buy, but I still think it was a good buying point. 140, what did I pay? Arch, 151. I still thought it was okay at 151, but obviously better to buy at 137. Synovus now at 1842. So, man, it gets emotionally draining when you start seeing your portfolio just jumping around so much. And this portfolio probably is small compared to some of you out there in your portfolios, but I think it's a significant amount to see. I think it was close to 21,000 before just a week ago. So we've seen good 10%, 12% drop off. But this is a long-term game, so I think this portfolio is going to be okay long-term. I'm just a little bit skittish about where these markets are going right now and what exactly is going on. We're seeing a really, really strengthening US dollar, which is never a good sign. I think right now the exchange rate we're looking at $1.15 to the pound. I mean, this is just absolutely... Pound is taking a beating. The dollar just continues to get really strong, which is not actually a good thing for the stock market. And I think that risk in the markets continues to climb. Where that goes, who knows? Nobody has a crystal ball, but I'm definitely concerned about what's going on with this dollar strengthening, because that's not a good sign. Because if the debt market melts down, then we're all pretty much screwed. But we'll see. Hope for the best, right? Plan for the worst. Never know what's going to happen with this stuff. But it gets emotionally straining on the brain when I look at the portfolio and I see that I made a timing mistake. I'm like, no. It's not a good thing. But stocks are not for the faint-hearted. That's why I say just put it in an index tracker, forget about it, come back in 10 years. Then look at it. You should be happy. Have a quick look. Invest 22 High says you should look into Somo. They have great loans on their secondary market. Stephen Hale just had a quick look at Somo. Interested if anyone invested. Maybe worth a detailed look. Mike says, make sure you understand the model of Somo, which is not pure peer-to-peer. It's a security assigned to lenders in trust. It's unregulated lending. That is certainly more risky for sure. Alan says, I've had 4 loans with Somo, 3 repaid, 1 extended. Now, happy enough. Stop lending while rates drop too low, but rising again. £5,000 minimum on the lending on those loans. Yeah, I don't like it when those so high. I don't necessarily want to invest $5,000 in a single loan. I prefer to spread money across multiple loans, because all you billionaires out there can do that. Me, not so much. They do have a good record. Paul News says, forecast for energy bills next year, £7,700. Whew. That's going to be tough. I think Assets Exchange too, they have a new property that was announced too that is going to be going up on the market, or is either up. Kuflink, 800 plus reviews, 94% are good to excellent, far more useful than Google reviews on Trustpilot. Yeah, I agree. I always like to look at Google. I don't know why. I mean, just something I look at from time to time. But yeah, I think it's worth looking at Trustpilot too. I think reviews, sometimes you could tell that, I'm not saying this about Kuflink, but some companies pay for reviews. You can tell the way they're written sometimes, and there's a lot of outsourcing companies that will write reviews for companies for very cheap money. The Money platform have put up a statistics page. I'm still trying to get those dates organized to get these live stream people to commit, but we'll get to it. Hi, Akichak. Better late than never. Good to see you. Yeah, Invest22. Can you have an update? The update is I'm waiting on them to confirm dates. I have sent out emails to 4 new guests, and they said they will get back to me. So that's what we are waiting on. Does anybody you want to see come on the stream? You let me know. I'll try to get them here. Yeah, sometimes I don't want to bring people back too often because they don't necessarily have too much to say versus the last time. And I know a lot of you people here are regulars, but if there's somebody you want on here, tell me. I will do my best. Hit that thumbs up if you can. Appreciate everybody watching. Evening, Robert from Greece. Yeah, Robert, I was just watching a documentary about Greece yesterday about the, for anybody who's a basketball fan, the Antetokounmpos, Giannis and Giannis, the two brothers who were Nigerian immigrants who landed in Greece and grew up in Greece and were illegal aliens there. It's a pretty interesting story if you like, even if you're not a basketball fan, it's pretty good. It's called The Rise. It was made by Disney, so a little bit cheesy, but good stuff. Vermilion dropped 30% a week, so I sold at the top. Well, hey, that's good. Next time. Still up 190%. Yeah, Vermilion's been on a tear. Good for you for selling. I should have sold. Patty, welcome, Jeff. On Trading 212, I've cautiously taken positions in Berkshire Hathaway, BlackRock, and Markel Plus, the S&P 500 ETF. How's the Vanguard doing? I think it's, let's have a look. See how Vanguard is doing. Probably not doing that great at the moment because of the S&P 500 is being pooing the bed. I mean, look, we're at 746 pounds and 64p as of yesterday. And let's look at the price performance historically. So, what? 2 weeks ago, this Vanguard was 770, 778, 785 at its high point, 19th of August. So you can get it at a discount right now. 40 pounds of a discount. So, it's not a bad time to scoop some up if you have some extra funds available. S&P is down. The rest are in the green. Typo, taking positions. Assets Exchange new loan went up yesterday. Sold out in a few hours. Now on the secondary market at a premium. Yeah. There you go. Well, I think that's going to do it. I hope you enjoyed the stream. We've been going for 49 minutes. I'm doing my best to get the guests to commit to a solid date. I'll hopefully have an update for you next Thursday. If not, a guest next Thursday. We'll see. We'll see what happens. But listen, guys, have a great weekend. I really appreciate every single one of yous for coming and watching this stream every week. I hope you get a lot out of it. If you do, great. If you don't, that's good too. It's all free. So I will see you next Thursday, if not before. Have a great weekend. Be safe. Enjoy the weather. Hopefully it's sunny this weekend. Take care. Bye-bye.